Hi everybody, and welcome to our supply chain transition program. This is a webinar to give you a bit of detail and background about the recently launched supply chain transition program, which is a business support program available for manufacturing SMEs across the investment zone in the West Midlands. We'll give you a little bit of an outline to the program, and then we've got a couple of exciting sessions with Craig McVoy speaking with Ken Kigdem from one of our businesses that's been supported through the program. And also a colleague from Birmingham City University, so that's Javed, who's going to be talking about how the university's played a really key role in terms of supporting the businesses through the program. And you can see how you can get involved in the program at the end of the session. So just to start, I'll give you a little bit of details about the program itself. As I say, it's just relatively new program in the West Midlands, being launched across the investment zone. The investment zone covers Coventry and also the wider West Midlands Combined Authority area, and also Warwick District as well. So the background to the programme, it's trying to really address 4 or 5 key issues that have been highlighted by some work that the Productivity Institute carried out towards the end of last year. So the first thing is around low productivity and operational efficiency across SMEs, across manufacturing sector in the region. Second one's really about poor engagement with R&D and innovation infrastructure that we have in the West Midlands. So we'd really like this programme to provide an opportunity for businesses to get more involved in the assets and opportunities that are available in the region. The third one is around identification of skills gaps that we've got, particularly in leadership teams in SMEs for manufacturers. And really the help and support that the programme can offer in terms of building those skills for the future transition of manufacturing businesses locally. And then finally, the research from the Productivity Institute recognised the barriers to high entry growth clusters that exist, which really make it just too difficult to move into and pivot and diversify into those new growth clusters for the future. So what is the program? It's a program to help manufacturing SMEs diversify, transform, transition into new growth clusters in the region. These are identified in the region's regional growth plan, which was launched last year, and include growth clusters such as aerospace, electric vehicles, medtech, health tech, future and low carbon construction, and also smart energy systems. So some really growing sectors for manufacturing businesses to move into. The programme itself is being delivered by a consortium called Supply Smarter West Midlands, and we comprise C&W Business Solutions at part of Coventry and Warwickshire Growth Hub Group, and we're joined by 3 universities, so that's the West Midlands Combined Universities, BCU, Birmingham City University, Coventry University, and also the University of Wolverhampton. And then we're also partnered by the 2 high growth value manufacturing catapults in the region. So that's Manufacturing Technology Centre, MTC, and also WMG at the University of Warwick. So a really strong consortium in terms of being regionally based to help with the delivery of the programme for the region. So what does it involve? Well, you sign up to the program, and then it involves some intensive support. We would work with the business to provide up to 5 days worth of free specialist advice from some of the experts around the consortium, and they will help you create an action plan to help with your diversification journey into those new markets and help you secure more orders. There's also an opportunity to engage more closely with regional OEMs and tier 1 suppliers. And there's also an opportunity to bid into a grant pot that we have available in each year. That's up to £1.5 million available, 50% match funded, but the grants available are from £20,000 up to £200,000. And they're for R&D projects that you might have as a manufacturing business to help with your diversification journey. And then finally, the final element of the programme is a leadership and skills management training element, which is provided by 4 of the university delivery partners. So a real opportunity for delivery for leadership teams to benefit from upskilling and help with that transition journey. So that's a bit about the program. I'll come back at the end and just give you the details of how you can sign up. But in the meantime, I'd just like to hand over to Craig McVoy from Turnkey Limited. And Craig has been working with us for many years and has got a lot of experience in terms of raising investment for manufacturers. So he's just going to give us an overview about some of those opportunities and how you can benefit your business becoming more ready for investment for the future. Craig, I'll hand over to you.
Okay, hello there and welcome to a session that I'm about to run now for you on preparing your business for investors. So manufacturing businesses in the region are going to need that fuel of investment that's going to be able to power them through the next stage of their growth. And the supply chain transition program helps to do that. But you're going to need some help in terms of being able to get the right elements in place to invest in your business. So that's what this session's all about. And we're going to run through quite a number of different areas that you can explore. And I'll explain to you how you can go about finding more information on those as well as we go. So I guess the question is, first of all, why do businesses need to raise finance at all? Well, kind of alluded to that a little bit there by saying, as you grow as a business at different stages, you're going to have different needs that you're going to have in your business, and that's going to require you to pay for it. So how you pay for that will depend upon what mode of funding or investment or finance that you are able to generate for your business at that stage. Investment then should be the fuel that enables you to grow and develop a stronger business. It shouldn't be the core of your business, but it should be the ability for you to take that amazing idea that you've got now, or that amazing product and service that you've got, and then turbocharge that into space in terms of how you grow your business. So all of the investments that you will look at considering will require a return on investment for the funder, whether that be you and your own business funding something, you'll want a return on that investment, or whether that's an external funder that is able to provide you with the finance to grow. But it should be about developing a stronger business. So it should be something that's easy to back as an investor. So it should be a no-brainer in terms of the decision. But the stage of business that you're at will mean that you will have different elements of consideration before deciding which type of finance you go for. Some elements will be open to you and other elements won't be there as an opportunity because the business doesn't have anything to secure that investment against. So we'll look at all of those as well. The other thing that's quite an interesting consideration is, depending on what stage your business is at, will depend upon what skills and development and also what things you need to spend money on, because you're going to need different elements of development of your business at different stages. And we did some research on this, which enabled us to look at how those 11 categories of development are formed for a business depending on what stage they're at. So we have 3 different stages that we would work with before you become a scale up, and those are a startup category, and what we call a maturing business, which is between 100,000 and 1 million, and then a scaling business, which is 1 to 10 million. 10 million plus, we would say, is very much a scale up business. So those are 3 stages to take you from a startup, which is pre-revenue or just earning its first revenue, through to a startup phase, which is anything from sort of 0 or 10k up to 100k, and then 100k to 1 million, and 1 million to 10. And as you can see from this slide here, the needs are very different of what enables you to move forward in that business. So to start with, as a startup, the 3 things that are really significant for you is sales, because a business without sales is a hobby. the value proposition that you offer, and the marketing in terms of reaching those target customers. Growth is a significant goal, but it's those three things that really are the core as to whether you survive as a business or you end up being a failed startup. And with 90% failure rate within 5 years, it's really important to get those three things right to start with. As you can see, as you grow slightly past the 100K mark, growth is then very much the key factor, and marketing becomes much more about targeting that marketing towards your ideal customer. The value proposition as well is becoming refined. So you may have sold lots of different things or lots of different version of a thing to people in order to figure out what they want. But the value proposition then is about how do I figure out what everybody wants and double down on that. And as you can see on the far right here, when you start to become a scaling business and you're past the £1 million mark, people becomes the number one factor as to the areas you need to develop to get that growth in place. So growth and people will become the top areas of focus for you, and optimization kicks in at that point. So you've probably done lots of different things at that point, and you've then got to start to unwind them to make them systemized and standardized. So optimization, finance, marketing, still important, but people without a doubt will be the biggest headache that you've got in terms of being able to fix things. So why am I even talking about skills development when it comes to investment? Well, as we said earlier, it's really much dependent upon what is the investment for that you're looking to raise investment. So is it about survival in terms of your business? Is it something that's going to help you get through a period of time so that you can then be in a position to be able to grow the business, but you know that it's going to be restricted for a period of time? Or is it about expansion? Is it something in terms of you're going into new markets or potentially going into a new country or a new demographic? So is it expansion that you're considering those things for? Or is it new products? For instance, you're thinking we're going to add something totally different to what we've got currently, and we need to invest in that. That could be tooling, it could be equipment, it could be a number of different factors, or it could even be the knowledge to know which of those things you should do. So it could be a piece of consultancy or an understanding around the market. So there's lots and lots of different things that you may choose to use in terms of getting the investment that you need and making sure that the investment is the right type of investment for you at that stage in your business. So when we talk about which option is right for you in terms of funding and fueling that growth, there really is no right answer. There's no single answer. There's just what's right for you right now and what's different for different businesses. Some can't be offered to one business, whereas it may be applicable to another because they're at a totally different stage. Some options will be excluded because you just simply don't tick the criteria box. So it's really important for you to know what you can do as well as what you can't do, to be able to channel your time and energy into securing that investment. So let's go through a few of those now, and we'll do that really, really briefly, because these topics on their own could be significant. So we have bootstrapping, which really means you reinvest in your profits back into your company. So you've got sales coming through the door, and instead of taking that money and spending it or paying yourself a big salary, you're reinvesting that money in the next set of development for your business. It takes longer, obviously, to do that. You need some momentum, and it's something that is very, very difficult for businesses that have a high amount of capital required, but it is possible. So it shouldn't be the last thing you consider. It should be, how much bootstrapping can I do so that I'm able to retain as much value in the company as possible. There are a number of different grants that you can consider, and these will come from various sources. Innovate UK, they may come from local government or come from the a combined authority or the authority that is in your region. And this is where the supply chain transition program really does add significant value. So one of the grants that's available to accompany the program will help you to move forward with developing the areas of expansion that you're looking for, whether that be into new markets, new products, or making some forms of development, R&D and innovation in your existing proposition. So grants will really help that. They generally take as well quite a bit of time to get through the system, and this is another reason why the supply chain transition program is a much better fit for manufacturers. Yes, it requires quite a lot of preparation work, but once you get in front of that panel with your application, within a week you will know if that is something that you've been successful for. So much better equipped than something that, say, run through an Innovate UK competition where you might apply for that, and again, very time consuming, but you might then be waiting for 3 months or longer as to know whether you've been successful or not. Grants typically are very competitive, and in which case less people actually secure the grant than what apply for it. So competition will always be high, but at least in this program, if you are successful to be accepted on the program, you will have an opportunity to pitch and present to a panel and get a really quick decision, which is great for you as a business. You need those decisions to be really swift. If you're a bit of a bigger business or you're more established, you can consider a debt finance option. So this always is a type of loan, whether that's asset finance or invoice factoring or lots of different types of debt finance. It might be that you're looking to get money for a piece of equipment, or money for stock, or money for components, or even fueling your payroll in terms of your staff to be able to bring on new people. So whatever it is that you're looking to get some money now, as opposed to in advance and waiting to bootstrap it in the future, a debt finance agreement will always be about, I'll pay you the money back at some point over a period of time, and therefore I will then pay you extra back, because that's the percentage uplift that you pay as a fee. So the only thing you're giving away at this point is future money in terms of interest payments there. So debt finance falls into that camp of, I'll pay you what you've lent me plus a bit more in interest. If you start to move into equity finance, then these are people who are giving you a chunk of money that you don't need to pay back, but they're taking a slice of your company. They're taking a slice of the cake as equity in your business as a result of that. So essentially, they're buying a share of your business from you. It's not free money by any means. It comes with lots of different consequences. So they may take voting rights in your business. You may have to seek approval from them over decision making and various different options. So you need to really consider the terms that are applied to this. Equity finance is something that businesses will go for when they need generally a significant chunk of money in order to take their business to the next stage. But the terms are very important. We'll cover that in a little while. The terms are very important for you to consider if that's something that you're looking to do. And a different type of equity funding is sweat equity, which is what Turnkey provides. And what that basically means is that we will provide you with a team of expertise that you just couldn't afford to inject into your business right now in exchange for that slice of equity. So highly experienced people who will have been in your shoes, but will have skills that you don't have, whether that be marketing, sales, technology, legal, funding, finance, strategy, brand. There's a plethora of experience that you can draw upon, but essentially you're saying, if I had this amazing team wrapped around me, I'm pretty sure that I'd be able to take this business with their help up to a figure of 10 million or 20 million or whatever it may be. And therefore, that's a different type of agreement to equity finance, which is just purely you being given a check or an amount of money. But all of these come with consequences. So investors, by the nature of the fact that they are investing, want a return on that investment. So your job is to be able to explain, how is that investment return going to come? What are the elements that you're prepared to give? And are you prepared to take the type of terms that come with that? So if it's an equity investment, you may have a different person on your board now who has to give their approval for certain things. That will be written into your shareholders agreement and the articles of your business. So legally, they'll have a right to a decision. And if you're a founder, that might be a very different type of arrangement to what you're used to. You might not be used to having to ask for someone's permission. If that's a debt provider, then they're going to want to know that if you can't pay it back, we are able to take something of value from your company. So whether that's an asset that you're raising against, or personally you're giving a guarantee. So none of these things are entered into on the basis that you're going to just be able to take some money, and if it all doesn't work out, then it'll be fine. That's definitely not the case. So you absolutely must go into it with eyes wide open. In terms of attracting investors, well, you need to have a number of different things that are at your disposal in order to be able to give them the information they need to decide if they're going to make an investment or not. So when you do get to a position of attracting an investor, and it's really important that you choose the right investor, they're going to want to see a number of different things that we'll cover today, but things that talk about your finances, things that talk about the goals of the business, and the ability for you to deliver something that's unique and is going to help to generate market share. So they're going to need to have that information from you. So it's really important that you get a number of those things all wrapped up into what we call a data room, which is where you store those things so that you can share them easily with investors. And we'll come on to that in a little while in terms of talking about what sort of things you need in your locker there. But selecting your investor is really important, and finding your ideal partner in terms of investment is a significant decision to make. So attracting the right individuals is very personal. You need to make sure that you are choosing people who you'd be happy to work with, finding your ideal partner. So you will also get lots of no's before you get a yes. So you need to be mentally resilient in that respect. You need to be ready to see that not everyone is going to say yes. In fact, the majority will say no. But when you do get the right person, what do they offer you? Apart from just money, of course, what sort of other support will they bring to your business? Do they value what your company offers? Do they believe in your purpose and reason that you exist? And how active are they going to be in terms of your business? So those types of considerations apply very, very differently across those different types of funding. So, from a grant perspective, for instance, it's all about innovation. So yes, they are not going to be sat on your board and doing lots of decision making, but they are going to want to know, have you hit the targets you said you were going to do? Can you be able to deliver the return that we want to see, which is growth of a business generating a return on investment in the ecosystem? So for the local area, for the national area. So are you able to prove that what you've done has made a difference in terms of ticking their boxes on the grants goals for that? When it comes to debt, it's literally a case of you being able to show, I've got some money that I want to borrow, but I've got something to borrow it against. So I've got a credit history. You can have a look at my previous financials. You can see what I own, elements that I'm prepared to lend against, because debt is all about being able to borrow now because you've got something, a strength of something in your business that means that they get security. So that could be a car, it could be a property, it could be stock, it could be IP, it could be a number of things that somebody has a value on. And if you don't pay it back, they're going to take that off you. So that's the easiest way to think about debt, is that they're going to want to see, if this all goes wrong, what do I get in exchange back from you? Because if you don't have anything to borrow against, then I'm not going to be able to lend for you the money. And this is why sometimes in high growth startups, you see angel investment or VCs involved. So from an equity investment perspective, founders come into it with 100% of the business. And then they may then take a round of investment fairly early on while the business is small, because they need that working capital to be able to do certain things, whether that's more innovation, development, or whether that's just staying alive and afloat long enough to be able to turn the business into a success. So yes, as a founder, you'll have 100% of your business, but 100% of nothing is still nothing. So if you have a business that's really early stage and you want to get to the next level, equity investment of some kind, whether it's sweat equity or financial equity, is something that you'll need to consider. So this diagram here just basically shows that businesses have the opportunity to raise investment multiple times. They're called different rounds. And is that a seed round? Is it a Series A round? But what happens generally in that journey is that as you raise another round, you'll have taken the business on a development curve that means it's now worth a lot more than it was previously, because we used that funding effectively. So those types of investments mean that I'm taking your money that you're putting into the business and I'm spending it wisely so that I can grow a better business. And I'm quite happy to give you some of the business in exchange for that. So early stage investors are looking for anything between 10 times their return on what they put into the business, up to 100 times return. So, for every pound that they put into your business, they want somewhere between £10 back or £100 back. And that can make a big difference if they're putting in something like £250,000. So anyone looking at an SEIS investment where 250,000 is the limit, you'd be looking for something there that is potentially 2.5 million all the way up to 25 million. So it's a big return on investment that someone's looking for. So only really relevant for high growth businesses that are looking for an exit at some point. When you look at more developed businesses, so private equity and family offices are looking to buy businesses, scale and sale, really. So what they look to do is to buy a business, incorporate it into the group, buy a number of different businesses that all complement each other, group them together, create one big company, and then sell it in 3 to 5 years for a profit. So they often merge a lot of companies together to do this. They gain a lot of efficiencies by removing those shared services like HR and training and payroll, etc. So they gain a lot of efficiencies, and then they grow them to a multiple where they can sell them for a profit. So whereas an equity investment is generally, I'll buy a share of your business, these are, I'll buy all your business, and then we will work together to grow that in a group of companies. So very different what they're looking for in this respect. If it's a PE or a family business, they're looking for a business that's gone already through its growth stages and has reached a point where if you just now bolted it onto another set of businesses, it would develop and grow even further. So a bit like mergers and acquisitions, really, in that respect. So as you choose your investor and your type of investor, you really need to be able to demonstrate that you're going to be able to meet their goals within your business plan. So your goals as a business need to be part of their story. It's then all about them, really. So different lenders and different funding types will want a different amount of involvement in your business. To say they want to be able to demonstrate that they've ticked their boxes in terms of what they're looking to get out of it, whether that be a return on investment of a percentage uplift on a loan, or whether it is I'm going to sell your business in 3 years' time and it's going to be worth a lot more. So think about that when you're looking at what type of finance and funding you want to be part of. And that preparation that you build into deciding what investment you're going to offer is very personal. So it has to be suited to them as an individual. They have to look at what you're offering and see it as something that is really interesting to them. It ticks their boxes massively. So history of other things that they've done as investors will generally guide you as to whether that is the right type of investor for you. So is it that they match your values or your purpose, or is it that they have investments just in your sector? Do they share similar goals? So all of these things are about trying to match to the right person and the right investor for you and your business. Because if you get the wrong one, then that relationship can seriously turn on its head really quickly and become very stressful for everyone involved. So what you really want is to make sure that you're interviewing someone to be your investor, just as they're interviewing you as a potential business to invest in. And therefore, really important that you get that target list right. It's very much about finding your ideal match. Target those who match what you're looking for, both in terms of the way they do business and also what benefits they bring to the table. Because if you just target everyone, it's a bit like dating. You wouldn't try and date everyone, nor should you by that meanings. But if you always swiped right, then you would be in a world of problems. There's people that are right for you and there's people that are not. So make sure that you choose the ones that are going to be right for you. And therefore, if you know what you're looking for, fish where the fishes are. So go where you know that your ideal investor will be, whether that be events or online or in social media, or that you know that they mix with particular organizations or in networks that you know where they hang out. Although if you've got shared connections to them, then these are the type of things that you need to explore. But be where they are, be available to be able to make a relationship with them. Because if you just reach out cold to investors, you've got to understand they're getting so many different people do that to them. Well, hundreds, sometimes thousands of people that are reaching out to these individuals and companies for their money. And you just won't get a response, which is really difficult for you as a person who's selecting an investor. So what really is the benefit there is to know who you're trying to attract, and then you can end up being where they are. And make sure you build a plan that enables you to do that at the right time frame, because investing takes quite a long time. Depending on what type of investment you're going to go for, it can be the difference as to whether you are looking to get something within the next 6 weeks, 6 months, or even 6 years. So it really does make a massive difference. Don't wait until you actually need the money before you start raising, because you'll just run out. Okay, it's too late then. It's a full-time job for someone to fundraise for 6 months plus. The terms that you can get will always be much worse if you absolutely need the money then, because people know that, so they can offer you something that's not as nice. So know your runway and how long you've got in terms of planning to be able to raise. And therefore always be ready for a conversation. making sure that you've got everything already pre-packed, ready to give to somebody who will ask for a number of different things that they're looking for. And as we said, those things are generally stored within something called a data room. So everything in one place in a secure location that someone can have a look at. And that could be a number of different things. It could be a Dropbox folder or a OneDrive folder. It could be a data room that's specifically held for investors, and it's something that's very much made for that purpose. But what someone really wants to know is, you've got everything in one place, I can access it quickly, and I'm able to see it and get the answers that I want to look at. So what is it you put in your data room then? Well, that will differ depending on what type of funding you're trying to raise, but really one of the things that they will absolutely want to see is your financial forecast and accounts. So looking backwards, they'll want to look at the history, how's your business done, and looking forwards, what is it you're expecting it to deliver if I give you some money? So when is the growth going to happen? When is the return on investment going to be paid? And how can I see that in the financial terms of what you're expecting this to happen in your business over the next 3 years, probably? Depending on whether you're looking at equity or debt, will depend upon whether you generally have a business plan or a pitch deck. Pitch decks are used with investors for equity, and business plans are what finance providers of debt tend to look for. So if you've got either of those things in mind, then really that's the format that you need to be being able to pull everything together to make it easy for you to see or to show why you're investable. Why should someone choose your business? What's in it for them, and why are you absolutely the person they need to add to their investment portfolio? They're going to want to look at a valuation of your business. So can you afford this investment, and how does that valuation change? What's the business worth today, and realistically, what's it going to be worth when you pay back that investment? So whether that's an exit value for an equity investor, or whether it is your accounting for the last 3 years as to whether you can afford a loan, they're going to want to have a look at that. And certainly for debt providers, they're going to want to look at an asset register. So would PE, if they were buying your business, they'd want to know what assets they're buying. So having an asset register with everything in one place is really, really important. And then having that adapted for the current marketplace is really important. There's no point in having a valuation that was applicable in the .com era or where, pre-COVID. It's all about, is it relevant now, and can you show me why it's relevant? So make sure that it's kept up to date, and that your expectations are also up to date as well. Before you get into a pitch deck or a business plan scenario, what you really want to have is a one-pager that you can share with potential investors so that they can really quickly and easily get it, to pique their interest. And it's a simple introduction that you can pass on before getting into a much more detailed conversation. So that's the one pager that you need to develop, and you may have several of these depending on the type of investor that you're applying for. The other thing is testimonials and case studies. So making sure that you're able to show social proof to these people as to it's got legs. What I'm trying to ask for investment on has legs, so that people will buy your proposition, whether that's a service or a product. It removes a barrier by saying, here's a load of other people who've had an experience with us and they really rate it. They really think it's worthwhile. And so in summary then, what are the things you need to consider when it comes to your investment? So number one, making sure that you are choosing the right investment type that's right for you and your business, regardless of what you want in terms of the amount of money. Can you afford to have debt at the minute? Can you get a debt provider to want you to give them some money, or do you not have enough history in order for that to even be a consideration. So you might need to then consider equity. So what are the investment types that you're prepared to consider, and are you eligible as a business to get those types of investments into your business? Secondly, select the investor that's happy to go with you on your journey, the journey you're going to go on regardless. They need to be an investor that's prepared to go with you and back you 100%. So making sure that you're choosing the right investor there that's going to come with you on that path to success and growth. And thirdly, make sure that when you have your ask, you've got everything prepared and ready to give to them. So here's what I want, and here's all of the information that you might want to consider in order to make a decision as to whether you want to back that or not. So those are three things that you need to consider. And just one final thought from me, which is, if you get the right investor, then you can live happily ever after. Equally, a bit like a marriage, you want to plan for divorce before you even get over the aisle. And the important thing here is to consider that at some point in time, unlike a marriage, you are going to divorce your finance partner. So your investor will leave you because they want a return on that investment. So at some point in time, you are going to part ways. So you need to understand what is the right person to come on that journey for me. A harrowing statistic for you is that the average angel investor stays with a business longer than the average marriage lasts. So make sure that you're choosing the right person to come on that relationship with you. Work on it like it is a marriage. You both need to work on it to make sure that you have a harmonious relationship. So make sure you pick wisely, make sure you pick the right person and business that's going to support you on your growth journey, and work at it to make sure that you work together through the good times and the bad times in terms of getting through it. So hopefully that's been useful for you. My details are here if you want to connect with me. We help businesses to grow and turn into scale-ups. That's our whole business model. We have quite unique solutions in doing so in terms of advisory and also in terms of that venture portfolio for our sweat equity model. So if that's something of interest and you want to connect with me, or if I can help to answer any further questions on this, then here's a QR code that will take you through to my LinkedIn profile, and I look forward to helping you further there and speaking with you. So thanks for your time, and have a good day.
Thank you, Craig, for that really helpful experience and insights and overview of some of the investment opportunities for businesses as they're looking to navigate the transition journey into the new growth sectors. So our next session for the webinar is a panel discussion session. Craig McVoy is going to come back and host the panel session for us. And we're going to be talking to Ken Signan, who's from Plant Carbon, who's one of the businesses who've been through the programme already and have benefited from all of the opportunities available through the programme. And they've been partnered with Birmingham City University and Javad Hashempour from the BCU, who's been providing some of the one-to-one technical support for Plant Carbon as they've been going through their transition journey through the programme. So I'll hand over to you, Craig, to lead the panel discussion.
So we've got one of our businesses here that's joining us today, which is Plant Carbon. And Plant Carbon's one of the businesses that is supported by the Supply Chain Transition Programme. And Ken, what would you say you were looking for help with from a Plant Carbon perspective that the programme has been able to bring to you and be able to support you with?
As a startup manufacturer especially at the level we're at in terms of manufacturing prototypes, with a number of barriers to entry, being final technical development, testing and accreditation, we very much needed a partner to work alongside which came perfectly in the form of Birmingham City University and the great team of people who have been supporting us through the first stages of this supply chain transition program, alongside, of course, the other support that is provided by BCU, which is the leadership program, which is a course to support businesses looking at their supply chain and how to meet different challenges along the way, especially for businesses bringing new products to market, accompanying. So the leadership program, which is a face-to-face, in-person course at BCU with a number of different learning providers, professors, and specialists there, which have experience in industry, in developing leaders and their teams, and how small manufacturers and larger scale manufacturers can look to the future and successfully face the challenges within their supply chain, and how to consider different viewpoints of how important that wider supply chain is. In terms of how we're working with BCU today for Plant Carbon, importantly, very much one of the biggest challenges we have is getting our products to market successfully, and that involves testing products within BCU facilities and labs, and as Plant Carbon, we manufacture carbon negative materials for construction, for developers, to enable to help them enable net zero targets. And BCU and the future the Centre for Future Homes at BCU are helping Plant Carbon by not only by testing the products, but by supporting us technically where necessary, and also guiding us then to scale, and looking at the challenges we have in manufacturing to enable Plant Carbon to achieve what we hope to achieve in the coming months and years within this region, to benefit all stakeholders. That's Plant Carbon, the large number of people Plant Carbon will employ, and all of the customers that we will be working with to enable their net zero targets. Yeah, that's where we're at.
Lots to do on that side, Ken. And Javid, from a BCU perspective, you're obviously looking to engage the expertise of BCU into many of these opportunities that can grow and really develop into a much stronger business in the region. So what are you looking for from those particular businesses that you're looking to support? What makes a great business to be on this program that you can help with?
So I think what we're looking as a BCU, I guess, is providing this support that especially for the startups and new businesses that are emerging across the region, to providing those technicalities and the support that they needed in terms of to become as an established business. I think what we were looking at, the businesses itself, we're not looking at the business, but the nature of the business, nature of the products, nature of if and whether that's along with the technical expertise that we have across BCU, and also establishing this relation between the industry and academia, which is, I think, a must for promoting any region, any part, any country, anywhere you say it. So it's going to be crucial and pivotal. For in terms of like, you know, plant carbon, I'm talking about my own experience. I really like the idea of the product itself. It's just sustainable. It has a very high, I mean, in terms of like, you know, the carbon content, or sorry, just
the carbon footprint.
This part is, what's that?
Carbon footprint.
Carbon footprint. Yeah, sorry, just the carbon footprint that these products, like, you know, has, and it's what we call it, its strategy, or the business, what we call goals, alliance with what is the BCU doing, really motivated me, just like, you know, to engage. And so far was not bad. So we kind of had a very good collaboration. I think it's the whole process also with the whole, I mean, West Midland Investment Zone, and the proposal was very smooth. And I kind of really like that part, that is really facilitating business and academia's working together.
Yeah, I think if you get academia and professors who've got all sorts of new groundbreaking research that they're bringing to market, and working with the likes of Plant Carbon and other startups that are really looking to bring new developments into the market, it's a really amazing combination to get those two things together. And it's not all plain sailing though, I guess. So getting to a position where you're even accepted on the program is quite a demanding piece, and rightly so, because the benefits are, you know, significant. So talk about how does somebody get ready for being on the program, and how does that panel make a decision as to how they decide this is a business we really think we can support? So perhaps get that perspective from BCU side, and then also how it feels from a business going in front of that panel. Ken, we can have a think about that for what comes next. But what is it you're looking for to get them ready for that panel, to make them able to speak to that panel of people that will be nerve-wracking, no doubt, who can make a decision as to whether to support them or not?
I was not part of the panel. I cannot say what they know looking for, but I can say from our experience, I think, and I was in a panel of different type of, like, you know, committees. What is, like, you know, I think they really looking at is from a macro, I mean, macro to macro, like, you know, benefit it can provide to, I mean, it can offer to the region. I think, first of all, I think they will see the idea. It's, I mean, doable. If it like, is it a product or service? If it's just like, you know, product or the service aligned with the strategies that set for the West Midland Investment Zone, the practicalities of that, like, you know, the proposal or offers that, like, you know, I mean, the product can offer. There are certain criteria, but I think the most one are how that, like, you know, business and its product or the service really aligned with the strategies. Is it, like, you know, feasible to doing it? Is the something that's a genuine idea that can lead to a real mass, I mean, manufacturing of a certain product, or offering the service? So I think these three keys here for the panel to see if they want to invest. So they want to ensure to see that, like, you know, see these three at least criteria. I think Ken also can just, like, you know, have input on that, because we also together we worked on it. There is also some other criteria, I think, in the program, which is also Ken is aware of. Maybe he can just explain it.
Yeah, Kim, what's it like from a founder's perspective?
It's a really good process to help you better understand, as always, whether you're doing a business plan or whether you're applying for support from a program like supply chain transition. I think these types of exercises always help you to better understand your business and build that strategy in a clearer way, because the panel who you are presenting to are people that you've never met before, and you are by rule not allowed to have met them or know of them. The actual panel presentation is designated 15 minutes of time, followed by Q&A session. Now, within that 15 minutes of time, you have to get across a lot of information, but there are a lot of there is a lot of build up to that. Now, it's not purely, of course, a 15-minute presentation. Before that, working alongside BCU, from which a team is designated. For example, myself and Javad, together we built an action plan. That's something that business owners will do with the team lead from the partner organization. They will build an action plan, which will then enable the business owner or business leader to finalize that application. That's if, of course, it depends on the type of support you're going for, because there is a varying degrees of support here. There is the partner organization, which can support you in different ways in terms of consultancy or technical support or accreditation support or testing support, or product development support, whatever it is that you specifically require. And then there is also the grant process, if you are applying for the grant process, which is a 50% match funded grant program, for which Plant Carbon did apply, and we were successful in that application. So that goes hand in hand with the action plan that is built alongside the partner organization, and that has to coincide with the application that you build for the grant, actually, why you need the grant, and that is very much services based. There is a project period, and that would be for in our case, that's finalizing product development, going through testing and accreditation, securing and finalizing our IP protection, and moving through into commercialization with brand proposition and a go-to-market strategy alongside other service providers, which will make it all together work so that we can meet our targets through to the end of the project, and go from a prototype product through to a market ready successful product which goes to market. And this process really helps business owners and teams and business leaders to cement their strategy for the near future, especially if you're at the startup stage, as we are. Whilst we are still in the startup stage, of course, Plant Carbon has existed for a number of years. There was a lot of barriers to entry because we're creating new products, new materials, and within that, one of the challenges that we had, of course, was that we weren't quite sure what product we were going to deliver to market, and we had finally come to that conclusion with a lot of the work that we did throughout the past year, which helped us to identify the products that we're going to market with, and we finalized that work alongside the team at BCU, and alongside the team of experts that are available to BCU, not only the chosen team, but people at the university who can be accessed as and when required for for guidance and information and expertise if required. And just having that discussion can open so many doors for you, can light a spark and give you inspiration to help solve a problem. And that's something that we've already encountered at BCU. So for example, as for myself, as someone who is working on product development and material development, and we're doing a lot of material engineering, and just one conversation can cement an idea, and these are with people who have dedicated expertise in a particular sector for so many years, and that's really valuable for small businesses to have that team to discuss an idea, a concept, and it may well be something that they have been working on, or that they did a research project on several years ago, or there were students who had done a research project on, and this partnership with Plant Carbon and BCU will certainly be something that we hope continues for many years to come. And within our action plan and within this application for the supply chain transition program, we have a plan to work alongside the Birmingham City University to have a graduate program where PhD students can be working on challenges for Plant Carbon, and also then a program to support students to come into employment following their studies, which I think will be beneficial for the partnership between industry and academia, and also support the region overall. So whilst we're building the application, it's very much focused on ensuring that we're aligned with the West Midlands Growth Plan, and we already did align with the West Midlands Growth Plan very much. When we had a look at the supply chain transition program, everything ticked the box for us, and there was so many other potential routes of seeking support and funding which seemed so distant and so far away. But with the supply chain transition program, you're very much talking to local people, you're talking to people face to face, and you're getting that understanding that they are and to any business owners out there in the West Midlands, I would very much say this is not like an Innovate UK grant application. It is very dissimilar to that. This is very personal. It is much more focused on your business. That support is available through local providers such as the Coventry Growth Hub and Coventry Business Solutions, which is the delivery partner for the supply chain transition program here in this region. So I would very much encourage local innovators and startups, if you fall into one of the clusters which are listed, which many of you will do, you must choose that cluster. Of course, you will already have an idea of what cluster you are going into. The support that is available here through the supply chain transition program and the delivery partners is very much focused on ensuring the success of your business for the future. So not only is that technical support, the development support, whether it be with accreditation and getting you to market, getting the right connections in place, but then building connections, building future contracts, or building scalability. And scalability is very important for startups. So with regard to Plant Carbon, on a personal note, we are very much on a level right now where we're developing prototypes, and it's more about the quality of the product rather than scaling manufacturing. At the next stage, in the coming 6 weeks, once we have finalized the initial testing period and we have achieved all the aims that we would like to within the early stages, we're then going into the scale up stage, where we'll be looking at and engineering the processes which will get Plant Carbon from a prototype level to the next level of manufacturing, to semi-automation and automation, to ensure that we can meet mass market demand and be a beacon for circularity and low carbon and carbon negative construction industry in this region. With BCU, up until now, our dedicated work has been focused on the product, but whilst my work with Javad will continue, in the next stage, there will be other team members coming in from BCU to then support with the different aspects of the business to enable that growth and scale. So we'll have experts in manufacturing and scale engineering to ensure that we can meet those aims, which is very important.
I guess lastly from me, because you've answered a lot of questions there that I was going to ask in one foul swoop, Ken. So I guess last from me was about the process is a really swift process that gets you through from application panel through to having those funds being able to use for making a difference. What difference will it make to Plant Carbon being able to access this? What's it going to unlock for you as a business?
It certainly unlocks a lot. And accreditation and testing for us was our main barrier, and to ensure that we're meeting not only industry standards, but to know where we are, to be able to commit to further development and to keep on improving our products and materials, and also to meet market demand. We need to know where we are, depending on the testing and accreditation that we can achieve, depending on the material, where it is, if we need to make any changes. That was such a huge barrier for us, and for different levels of accreditation and testing, the costs were so very high, and not only are they high, you don't really have a partner with experience in that industry when you are going out there on your own. So having that support from BCU and knowing where we need to be, because on a personal level and on the Plant Carbon's viewpoint, it was about, before we go into the external marketplace to do final testing and accreditation, we are carrying out exactly the same tests within the BCU network and facilities and the Centre for Future Homes to ensure that when we do spend, it is spent wisely and we know what we have achieved already, if it is necessary to do so. And the team within BCU have a very wide network. It's not just the network of the university, but very much the individuals and their experiences in industry and in academia, where they're able to ask the questions. If it's not available at BCU, or if it's not available immediately within that internal network, then it comes down to the experience of great people like Dr. Javad, who has so much experience in different areas of industry and academia, who can reach out to those institutions and get the support we need. That also supports and protects the grant fund and your own funds from being spent unnecessarily externally. And when it comes to many different sectors, of course, not everyone will be going into low carbon construction, but if you are in a different manufacturing business or in engineering, and you work with MTC or Coventry University, it is very much focused on the expertise that is required for that business, and the team from that partner organization is built according to the requirements the business has. That is, if the partner organization feels that the company organization fits the criteria that is outlined, and of course that comes through the delivery partner, which helps to link you with those partner organizations. So it's not you don't directly go to the partner organization. It's connecting with the growth hub, the local growth hub, and the local delivery partner, going through the initial processes, the initial interview processes, where they will determine your requirements, what your challenges are currently, and what the future of the business is, and how you can get from the stage where you are to where you want to be. And they will then help you to make that connection, and then the teams will be decided if the partner organization feels that that partnership is a feasible one and it will work for them. They then build that team according to your requirements. So it's not something to be concerned about with regard to how do I reach out to BCU, how do I reach out to Coventry Uni, how do I reach out to Wolverhampton or MTC. That is managed by the delivery team at the Growth Hub, and they will then arrange all the meetings necessary. And before the team is put together, you do have a chance to meet either face to face or on Teams, where you can help provide the input necessary to make sure that everything will be delivered as is required.
So I guess in summary then, just to close, to get a business that's currently in prototype stage, and to go from concept through to commercialization, the support of a single program and the grant that goes with it means that you're able to move from a business that's an idea, albeit a really amazing idea, but to go from an idea all the way through to something that's actually delivering commercial value. And
Yes.
That step is huge. Shouldn't be underestimated at all. It's an amazing opportunity for you. So very much a great program to be applying for if you're in a manufacturing business and you want to scale and you want to take that business to the next step. I guess you'd be fully endorsing that people would go for this in terms of application.
100%. I don't see many other options out there for manufacturing businesses which encapsulate so many different levels of support. It's not just about providing a certain amount of money. It's everything that it comes with that, and it's not just about one part of the business either. It's ensuring the project is delivered successfully, and that project encapsulates all requirements, from product development to accreditation to securing IP to market strategy to branding proposition, and through to engineering and scale up, which is very important for us at Plant Carbon. It's something I spend a lot of time on, and then you think, I wish I could speak to X, I wish I could speak to Y. These people are available through that partner organization, and those discussions will certainly help the business many multiples of times better than other programs available. It's not something that I'm trying to sell. I've had experience of seeking support for a very long time, not only in funding, but in varying different levels of support. And this supply chain transition program is most definitely something that helps you on many different levels. And I wouldn't say an idea is good enough, Craig. It's certainly something has to be valid. You have to have a structure to, especially to get past the panel. They have to believe that that it is something which is possible to deliver. I think you certainly should be at level 5 or level 6 in development terms, technology development terms, or technology readiness level terms, to ensure that you can get to the next step. I wouldn't say a very early stage idea. I think you could most certainly get support through the supply chain transition program. Getting the grant support then requires a higher level of technology readiness, so to ensure that that can be met successfully.
So I guess in closing, then what we would say is, if you're a business that's got potential to scale and to grow in the region, and you need that support, you need that guidance, and also you need access to working capital that's going to be able to unlock those barriers for you as well. And this is a great program for people to apply for. So thank you for your insights, Ken. From a founder's perspective, fantastic, and Dr. Javed, thanks from a partner perspective in applying.
Yeah, just want to add something at the end. I think the role of the universities here, because many of the startups, they have a problem when they start of hiring people, and that's going to cost them a lot. So many startups cannot survive. So I think what is the West Midlands Investment Program that you have, helping the startup with providing this expertise, joining these startups or the businesses, and reducing the risk of failing in terms of, growing as whatever, again, the product and the service. So thank you again for the opportunity.
That's great. So it's a great point in terms of the expertise that's missing from a business that can be. Yeah, absolutely. It's what the partners bring to the program. So 100%, it's another key benefit. So thank you both for your time today, and thanks for answering some of those difficult questions on the program.
Thank you.
Thank you.
So thank you, Craig, and thank you to our panelists, so Javed and Ken from BCU and Plant Carbon, to talk about their experiences of being on the program. So just to wrap up our webinar for now, so we've just, as a reminder, we've had a reminder of the benefits of the program. So specialist support from experts to help businesses create their action plan so that they can enter new markets, securing more orders for the future. There's also the opportunity to join the leadership and management training course that's being offered by the consortium partners, so be that BCU, Coventry University, University of Wolverhampton, or WMG. The opportunity to bid into the grant funding opportunity for R&D projects that the business may have. So that's 50% match funded between 20,000 and 200,000 to deliver on grant opportunities and to deliver R&D projects that a business may have. And of course, there's the offer of the one-to-one intensive support for the business, up to 30 hours, working with the consortium partners that I've named and listed, but also included MTC in there as well. So MTC and WMG as the two high-value manufacturing catapults in the region, and then also our three West Midlands combined universities, BCU, Wolverhampton, and Coventry University. So the ask then is for businesses who think you might be interested to sign up, and we'll be back in touch to arrange an initial discussion, and hopefully we'll help you with your transition journey. So we'll leave you with the details of the email address and also the webpage. So thanks for watching this webinar. I hope you found it really useful. Thank you.